Bursa Malaysia is confident the trading momentum seen in the local stock market will continue as the year progresses. There's plenty going on for it. For starters, there are IPOs which have the potential to boost trading velocity above the 27% achieved last year. One major listing to look out for is obviously the debut of EcoWorld International next Monday. The group will have a market cap of about 2.84 billion ringgit. That's almost equivalent to the combined market values of 4 new listings this year: HLT Global, Matang, Keep REIT, and Serba Dynamic Holdings. There are also at least 2 more listings in the pipeline. Bursa CEO Tajuddin Atan says these listings will be enough to get the market excited. Also supporting trading momentum, the return of foreign funds and the stabilizing of the ringgit. In the week of March 13 to March 17 alone, a strong inflow of foreign funds totaling 1.7 billion ringgit was recorded, pushing foreign inflow to the market to about 4.7 billion to date. Bison Consolidated is targeting to operate 400 convenience stores by the end of this year. The owner of mynews.com says that the expansion is in order to grow the company's distribution channel. It currently has 328 stores. CEO Dang Tai Lok said the group is on track to open 18 new stores across Malaysia in the second quarter of FY17, despite a slight slowdown over the Chinese New Year period. Meanwhile, on the international front, he said there has been interest from Indonesia, but warns that it's still early days. He added that Bison currently has 2 stores operating at the Yangon International Airport in Myanmar. The government is mulling raising cigarette prices, and that's obviously not going to be good news for BAT's sales volume. Quoting Deputy Health Minister Dr. Hilmi Yahaya, a local daily reports that cigarette prices could be hiked from 17 ringgit a pack to 21 ringgit 50 cent a pack. That's a 26.5% increase. Based on CIMB researchers' estimates, a 5% drop in BAT's sales volume would affect its FY17 to FY19 earnings estimates for the tobacco firm by 5.2%. The research house adds that the price hike could also lead to a spike in illicit trade volumes. In the fourth quarter of 2016, more than half the cigarettes sold were either counterfeit or smuggled into the country. The Transport Ministry has given its thumbs down to motorcycle taxi service Digo Ride. Deputy Transport Minister Abdul Aziz Kaprawi said that such services were not allowed in developed cities, explaining that Malaysian cities should emulate its more first-world counterparts such as Singapore, Tokyo, London and New York, which don't allow such public transportation. He adds that Digo's ban was also due to concerns over rider and passenger safety. Citing results from Miros's analysis, the risk of motorcyclists being involved in fatal accidents was 42.5 times higher compared to a bus and 16 times higher compared to a car. Last year's statistics showed that 62% of the over 7,000 killed on Malaysian roads involved motorcycle riders and passengers. Answering questions during Parliament, Kaprawi added that the government had already put in place many public transport options such as the LRT and MRT. The Wall Street Journal reports that 2 of Malaysia's former top officials allegedly had stakes in North Korean firms Malaysia Korea Partners or MKP. Quoting unnamed sources, the news agency says the 2 are former Navy Chief Ramli Abu Bakar and former Subang MP and MIC leader KS Nichar. It says that Ramli was a director of a MKP subsidiary, while Nichar was a shareholder at the same subsidiary. Malaysia Korea Partners is a Malaysian-based company said to be run by a North Korean businessman. It is believed to have violated UN economic sanctions while operating in Malaysia. According to the report, it tried to award ownership stakes to politically connected Malaysians to build local support and secure contracts.